if you don't look at everything cross-eyed, if you don't think outside the box, everything that's presented to us, I think you've missed everything that we lived through for the last 4 years. So as happy as I am that he's here, you have to wonder, what does it ultimately mean? I mean, what better guy to have oversee a bankruptcy or a restructuring or a reset than someone who's known for doing that professionally, maybe better than anyone. So I think there are a lot of things to keep your eye on. Most of them center around debt, and the BRICS have not lost sight of that. So don't underestimate the BRICS. Don't lose sight of the debt. Be optimistic, but understand that they're just like in the Shawshank Redemption, as I said with you before, Dunnigan, you have 2 miles worth of crap to crawl through to get to the other end. And maybe there is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt and that tunnel full of crap that we have to crawl through. Surrounding the BRICS nations has somewhat died down. I expect to see a reemergence of this discussion in 2025. Trump saying he'll enact 100% tariffs on the BRICS nations for continuing their desire to move away from the dollar. That's not a tariff. Tariff protects manufacturing, domestic manufacturing. That is a sanction masquerading as a tariff. That is financial warfare. That is not something that I think will dissuade the BRICS from continuing to move forward. I think that from a domestic standpoint, I think the debt issue is something that has to be front and center. I mean, even Trump just sent out a tweet the other night saying, thanks to what the Democrats have done, 2025 could be a 1929 style depression. You look at the latest Treasury data that was just released for November, which was the second month of fiscal 2025. The U.S. spent $584 billion for October and November. That's the first 2 months of 2025 for the fiscal calendar year that Trump is inheriting are officially the worst start to a year ever for the Treasury. When I look at gold acquisitions, again, China doesn't buy gold for no reason. And they've bought 1,000 tons since the start. That's what they tell us, since the start of the Ukrainian war. At the time, they've sold $250 billion of our U.S. treasuries. This is a trend that will continue. This de-dollarization will continue. I think they'll continue to accumulate gold rather than try to devalue their yuan against the dollar. They'll let it happen organically by accumulating gold. I think that's something certainly to focus on. Of course, it's the bond market. At the same time, I think the bond market, or with the Fed creating trillions to fund these deficits, that not only that they're inheriting, but the debt that is coming due. I think the bond market's getting very nervous that they see inflation coming back, that the ballooning U.S. debt is something that has to be dealt with, and how many Treasury securities will have to be created to do so. At the same time, many of the countries that traditionally supported our debt are moving in the other direction. So I think that's something that we'll have to continue to watch very, very closely. But yeah, I mean, if I had to guess, I would say also we're not out of the woods yet regarding the banks. And I'll keep coming back to what happened in Lindsay, Oklahoma as a trial balloon. They didn't say a word about it on the media. It was literally just kind of stuffed under the rug, and yet it's the first bail-in in this country with over $1 trillion in commercial real estate loans coming due in 2025. With interest rates moving higher on the back end. And it's not the federal funds rate that matters. The economy runs on the 10-year Treasury. I mean, the mortgages and the credit cards and the leases and all of these things, they're all about the long end of the bond market, which is moving in the other direction. What havoc is that going to wreak on the banking industry? What havoc is that going to wreak in the commercial real estate? And I keep coming back to this thought of restructuring. I mean, Trump is the bankruptcy king. I mean, is this something that's baked into the cake? Do they know that we're going to have to reset some way? And is he here for that reason?
The financial landscape of 2025 is shaping up to be one of immense challenges, growing complexities, and transformative opportunities. The ever-present specter of mounting debt, coupled with geopolitical shifts like the BRICS nations' pivot away from the dollar, has set the stage for a potential economic upheaval. Against this backdrop, gold and silver are emerging as steadfast anchors of stability in an increasingly turbulent sea of fiat currencies. The BRICS nations, Brazil, Russia, India, China, and South Africa, have long been a focal point in discussions about de-dollarization. While some of the fervor surrounding their initiatives has subsided, their intent to challenge the dollar's dominance remains steadfast. Andy Schectman's observation that Trump's proposed 100% tariffs on BRICS nations are more akin to sanctions than traditional tariffs underscores the gravity of the situation. These measures are less about protecting domestic manufacturing and more about financial warfare, a clear acknowledgement of the BRICS' growing influence. China, for instance, has been systematically divesting from U.S. treasuries, shedding $250 billion worth since the start of the Ukrainian conflict. Simultaneously, China has been amassing gold reserves, a strategy that signals its commitment to reducing reliance on the dollar. The implications of this shift are profound. As BRICS nations continue to accumulate gold, they reinforce the narrative that gold is not just a relic of the past, but a cornerstone of the future monetary system. The U.S. debt crisis has reached unprecedented levels, with the Treasury spending a staggering $584 billion in the first 2 months of the fiscal year 2025. This marks the worst start to a fiscal year in American history, a sobering reminder of the systemic issues plaguing the nation's finances. The bond market, often seen as a barometer of economic health, is beginning to show signs of strain. Yields on long-term treasuries are rising, reflecting investor concerns about inflation and the ballooning national debt. Compounding these issues is the looming $1 trillion in commercial real estate loans set to mature in 2025. With interest rates on the rise, the potential fallout for the banking sector and the broader economy cannot be overstated. The situation is reminiscent of a tightly wound spring where any misstep could trigger a cascade of defaults and financial instability. Inflation remains a central theme in this unfolding narrative. As Schectman aptly points out, the policies being enacted are inherently inflationary. Tariffs, for example, while designed to protect domestic industries, ultimately lead to higher prices for consumers. In this context, gold and silver serve as hedges against the erosion of purchasing power. The beauty of gold and silver lies in their intrinsic value. Unlike fiat currencies, which can be manipulated through monetary policy, precious metals are immune to such interventions. They are, quite literally, money that cannot be printed. In an era where central banks are creating trillions of dollars out of thin air to fund deficits, the appeal of assets with inherent value becomes undeniable. Schectman's musings about Trump's role in navigating the economic challenges of 2025 are both intriguing and provocative. Dubbed the bankruptcy king, Trump is uniquely qualified to oversee a potential restructuring of the U.S. economy. The question, however, is whether this restructuring will be a controlled demolition or a chaotic collapse. One scenario involves a return to sound money principles, with gold and silver playing a central role in a revamped monetary system. Such a system would impose fiscal discipline and restore credibility to the U.S. dollar. Another possibility is the adoption of a central bank digital currency, CBDC, a move that would mark a significant shift in the way money is created and used. While CBDCs offer efficiency and transparency, they also raise concerns about privacy and centralized control. As we look to the future, it's clear that the road ahead will be fraught with challenges. However, for those who understand the dynamics at play, these challenges also present opportunities. Gold and silver are not just relics of the past, they are essential components of a diversified investment strategy. For investors, the message is clear. The time to act is now. The policies being enacted today will have far-reaching implications for years to come. By investing in gold and silver, you are not only preserving your wealth, but also positioning yourself to thrive in an uncertain future.
You know, I've done interviews with people like Simon Hunt, who will tell you that he was selected, not elected, and he was selected to usher in this digital surveillance state. He talked months ago with me about they're going to issue a digital ID under the guise of election integrity. What do you know? He just said that. A lot of the things that I guess I'll just simply say this, and someone said it to me very apropos. He said, you know, is Trump the Trojan horse or is he riding on the Trojan horse? And that, I don't know. And I guess I would just simply say this after what we've been through for the last 4 years. If you don't look at everything cross-eyed, if you don't think outside the box, everything that's presented to us, I think you've missed everything that we lived through for the last 4 years. So as happy as I am that he's here, you have to wonder, what does it ultimately mean? I mean, what better guy to have oversee a bankruptcy or a restructuring or a reset than someone who's known for doing that professionally, maybe better than anyone. So I think there are a lot of things to keep your eye on. Most of them center around debt, and the BRICS have not lost sight of that. So don't underestimate the BRICS. Don't lose sight of the debt. Be optimistic, but understand that they're just like in the Shawshank Redemption, as I said with you before, Dunnigan, you have 2 miles worth of crap to crawl through to get to the other end. And maybe there is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt and that tunnel full of crap that we have to crawl through. So I think 2025 is going to be a volatile year. And when the president-elect says this next year could be 1929 style depression, thanks to what we've seen already by the Democrats, I think people need to, and then see 6-1 insider selling versus buying. I think we need to be cautiously optimistic into the new year.
As we delve deeper into the intricate dynamics of the financial system, it's evident that 2025 is poised to be a watershed year. The challenges are immense, the stakes are high, and the opportunities for those who act decisively are unparalleled. The backdrop of inflation, ballooning debt, and geopolitical tensions underscores the critical role that gold and silver will play in navigating the uncertain times ahead. Let's explore the broader implications and why precious metals are not just a choice, but a necessity. The BRICS nations' move to establish a framework that minimizes their dependence on the US dollar is a clear signal of a global shift. While the narrative around the BRICS has momentarily quieted, their long-term strategy remains robust. Trump's proposed 100% tariffs on BRICS nations further highlights the tension, but such measures are unlikely to deter their efforts. Instead, they amplify the urgency for these nations to develop alternative systems. China's accumulation of gold exemplifies this shift. Since the start of the Ukrainian conflict, China has added hundreds of tons to its reserves while offloading US treasuries. This dual strategy strengthens China's position in a de-dollarized world. For BRICS nations, gold isn't just a hedge, it's a weapon in the financial warfare against the dollar's hegemony. As BRICS nations continue to fortify their gold reserves, the narrative shifts from speculative to strategic. Gold becomes not just a store of value, but a cornerstone of economic sovereignty. Investors who align with this trend are positioning themselves on the right side of history. Inflation is no longer a transient phenomenon. It's the new normal. The US government's inability to curb its spending exacerbates the problem. Despite talks of budget cuts, deficits continue to balloon, with the US spending $584 billion in the first 2 months of the fiscal year 2025 alone. This unsustainable trajectory fuels inflation, eroding the purchasing power of the dollar. Schectman's anecdote about his father's 1963 income illustrates this vividly. What once constituted a comfortable salary is now a fraction of what's needed to maintain the same standard of living. Inflation is the silent thief of wealth, and its effects compound over time. Gold and silver, however, are immune to such erosion. Their value remains constant, offering a hedge against the relentless decline of fiat currencies. The correlation between inflation and precious metals is well documented. As inflation rises, so too does the price of gold and silver. This isn't speculation, it's economic law. The suppressed interest rates of the past 2 decades created artificial valuations across asset classes. As rates normalize, these distortions will unravel, creating a ripple effect across markets. Gold and silver will not only retain their value, but will likely appreciate as investors seek refuge. The bond market is often referred to as the smart money, and its recent movements should not be ignored. Yields on long-term treasuries are rising, a clear indication that the market is losing confidence in the government's ability to manage its debt. Higher yields translate to lower bond prices, signaling a lack of demand for US debt instruments. This lack of demand isn't merely a domestic issue, it's a global one. Traditional buyers of US debt, including foreign governments, are reducing their exposure. This shift puts additional pressure on the Federal Reserve to monetize the debt, a move that is inherently inflationary. The bond market's behavior is a canary in the coal mine, warning of impending financial stress. Gold and silver offer a counterbalance to this volatility. Unlike bonds, which are subject to the whims of monetary policy and market sentiment, precious metals provide stability. They are tangible assets with intrinsic value, unaffected by the creditworthiness of any government. Schectman's assertion that Trump may be the bankruptcy king brought in to oversee a restructuring of the U.S. economy is provocative but not implausible. The parallels between corporate restructuring and national debt management are striking. Both require a recalibration of assets and liabilities, and gold could play a pivotal role in this process. One potential scenario involves revaluing gold to stabilize balance sheets. As Schectman notes, every $44,000 increase in gold's price adds $1 trillion to the Treasury's balance sheet. While such a move might seem radical, it has historical precedent. President Roosevelt's gold confiscation and subsequent revaluation in 1933 were measures aimed at addressing economic instability. Could we see a modern iteration of this strategy? The likelihood is increasing. Revaluing gold would not only shore up the government's finances, but also restore confidence in the monetary system. It would signal a return to fiscal discipline, a move that could attract both domestic and international investors. For individuals, this underscores the importance of holding physical gold. In a world where currencies can be devalued at the stroke of a pen, gold offers unparalleled security. While gold often takes the spotlight, silver is equally compelling. Schectman describes silver as gold on steroids, and for good reason. Silver's dual role as an industrial and monetary metal gives it unique versatility. Its applications in renewable energy, electronics, and medical devices create strong demand, while its historical role as money ensures its enduring value. The current gold-to-silver ratio, which stands at an unusually high level, suggests that silver is undervalued relative to gold. Historically, this ratio has reverted to mean levels, indicating significant upside potential for silver. As gold prices rise, silver is likely to outperform, offering leveraged gains for investors. The parallels between silver and uranium are striking. Both markets have experienced prolonged periods of underinvestment, leading to supply constraints. Just as uranium prices tripled in response to dwindling inventories and rising demand, silver could follow a similar trajectory. Investors who recognize this setup have a rare opportunity to capitalize on silver's potential. The geopolitical landscape is another critical factor shaping the outlook for gold and silver. Trade tensions, shifting alliances, and the emergence of new economic blocs all contribute to an environment of uncertainty. In such times, gold serves as a universal currency, transcending borders and political divisions. The BRICS nations' push for a new payment system further underscores gold's importance. By settling trade imbalances with gold, these nations are bypassing the dollar-dominated system. This move not only challenges the status quo, but also elevates gold's role in global finance. For investors, this is a clear signal to increase exposure to precious metals. As we navigate the complexities of 2025, one thing is clear: volatility is the new normal. Whether it's inflation, rising interest rates, or geopolitical tensions, the challenges are multifaceted. However, within this uncertainty lies opportunity. Gold and silver are not just hedges. They are tools for wealth preservation and growth. They offer a buffer against inflation, a safeguard against currency devaluation, and a refuge in times of crisis. For investors, the message is clear: diversify into precious metals and do so with urgency. The financial system is at a crossroads, and the decisions made today will reverberate for decades. For individuals, this is a time for proactive measures. Holding physical gold and silver is not just a defensive strategy, it's an offensive one. It positions you to thrive in an environment where traditional assets are under pressure. The road ahead may be challenging, but it is also ripe with opportunity. By aligning with timeless assets like gold and silver, you can navigate the complexities of 2025 and emerge stronger on the other side. Let this be the year you secure your financial future with the enduring value of precious metals.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.